Hi there, in this video, we will be discussing how to use the Relative Strength Index (RSI) indicator in stock trading. The RSI is a popular technical indicator that can help traders identify overbought and oversold conditions of a security. Let's get started. To use RSI in stock trading, we first need to calculate the RSI value for a given stock's price data. We can use Python and the Talib library to do this. Next, we define the RSI period, which is the number of past price bars used to calculate the RSI value. The most commonly used period is 40. Once we have the RSI value, we can use it to generate buy and sell signals. A common strategy is to buy when the RSI drops below 30 and sell when the RSI rises above 70. However, it's important to note that there are many other ways to use RSI in trading, and it's essential to thoroughly backtest any trading strategy before using it in a live market. If you found this video helpful, please consider subscribing to our channel for more trading tips and tutorials.